Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, January the 25th. The year is 2021. Let's talk trading. Money management with Walmal. Now, before we get into it, just a quick reminder. These videos are for educational purposes only, and your results may differ from mine and from Walmal's. Walmal, the other day, you sent me a couple of quotes. You cannot maximize profit and completely protect against loss, and you cannot maximize profit and protect profit. So let's explain to the traders out there what those mean and how they can use them.
Yeah, and I don't even remember where I found those quotes or wherever, but the reality is I think there's a lot of truth to that, and it comes down to a lot with how you're how you're actually trading and what your style is, and you really have two things. You can either go and try to go for the big win, or you can't, and that's really what it goes and boils down to. So if you're looking to go and go for the big win, then understand that you're gonna take some losses along the way. You're gonna sometimes be up. I was looking for a bigger win today on a particular trade, and it was kind of funny. I actually got stopped out on it, but at one point in time, I was up, a good chunk of change. But that's just, that's just what's going to happen from time to time, and that's okay. That's just what happens from time to time, and you just have to realize that, and not get upset with it. Yet at the same time, there are times when it'll pay off. In fact, it was funny because I was just talking to TRO a few minutes ago. I went in and got into a trade before, and before this call, and when I was my EA, because of the way I've got it set up, my EA doesn't go and actually place trades or anything like that. It just helps me manage things a little bit. And what happened was I wound up getting 3 pips on the trade, and then I went and got a coffee break and came back and saw that if I hadn't have done that, I could have actually gotten that with 15, 16 pips easy on that trade. I can't get upset about that, because the reality is that, that's just what's going to happen. So, that first quote, you cannot maximize profit and completely protect against loss. Well, that's exactly right. If I'm going to go for the big trade, understand that I got a higher risk of actually taking a loss. Okay, that's just the way it is. But if I want to go and maximize my profits, that's the other side of the coin, and that is that, if I want to go and just maximize the profits as best as I can, well, that would be like going for that 15 pip win, but there's a high probability it's going to turn around and come up against me. So that's just the reality of trading, and you have to figure out what type of trader you are. Some people like to go for those bigger those bigger wins, whereas other people they're satisfied getting 2 or 3 pips. And the thing is, that's the most important word, I think, in all of it, and that's that satisfaction. It's sort of like you need to be satisfied with what you're getting if that's who you are as a trader.
Yeah, and remember, what's the first rule of the Walmal method?
Look left.
No, that's not the first rule. What's the first rule of the Walmal trading plan? Maybe I should put it that way.
Oh, yeah, manage your risk. Yeah, that's exactly right.
No, I think
capital is the most important thing. Preserve capital at all costs.
Yeah, that's what I was trying to get you to say. Preserve capital at all costs, because I think part of what these two quotes really need to hit home is that I don't think they're really talking about one trade, a single trade. I think they're talking about your overall trading performance, because if you want to maximize profit for your trading session, it's not that you want to maximize profit on each and every trade. And I think that's what a lot of us lose sight of. And that's why I sometimes, I say you're stacking bricks. When you put, every time you're putting $100 or $200, you're putting a brick or two in the bank, in the stack. as opposed to, wow, on this trade I made $1,200. Because
Right.
maybe you could have made 1,200, but you know what? What about all those other trades that never would have made 1,200, but you stacked one or two, but had you gone for 1,200, you would have lost 3 to 7 or 10. So that, I really think, is the main focus that traders need to do, as opposed to getting in there trade by trade, pip by pip, tick by tick, worrying about each trade like that. If you just take a couple steps back and go, you know what? If I'm taking, 20 trades a session and I just make, 1 or 2 pips, I'm making between 20 and 40 pips a session. And if
exactly right.
And maybe you have some losses, so maybe you are going to make between that, 20 and 40. Maybe it's only, 22. Maybe it's only 15. But the bottom line is that you are moving forward. Your portfolio is growing, and that's the overall goal.
That's exactly right. What you're trying to do is just make the portfolio grow and grow and grow to the point.
Okay, we had a little technical issue there, but the bottom line is that I think the best way to look at your trades is not to focus so much on each individual trade, trying to maximize the profit, but say, hey, I've got some profit. We can move the stop loss up to break even +1. We can take half off the table. But, just try and make sure that we do take profit when the opportunity comes. And every now and then you'll get those big trades. But, if you let one get by you, let that be okay. Let that not put you in the tilt, because then you're going to start either having fear or regret, and then that's going to cause you pain, and that's going to cause you to do something that's probably not smart. Walmal, do you have anything you want to add to that money management?
Well, I think, you covered it pretty well there, but, you're exactly right. You need to go and control your emotions with all this. And, part of controlling that emotions is that, I harp on this almost on every video, and that's know who you are. And by knowing who you are, you know the type of trading style that you have, and that will go and help you with going in and just going and putting into the bank whatever you're going to put into the bank. And then saying, you know what, if the market continues going in a direction that you were in, okay, that's fine. That's just what the market does. But also, at the same time, what can happen is that if you didn't get out there, it could go against you, and now you're in a negative position. So what you're trying to do is, make sure that you're going and consistently, and that's the important word I think that's there, is that word consistent. Consistently be putting into the bank, some money, putting into the bank some pips, putting into the bank some actual dollars, and by doing that, at the end of the day, you should be profitable. At the end of the week, at the end of the month, at the end of the year. And you know what? There are going to be trades you're going to get into, and maybe you shouldn't have gotten into. You made a mistake. You misread the chart. You misread what the market's doing at that moment in time. Or for that matter, the market just turns for some unknown reason. Some outside force comes in and dumps the market somehow. Well, that's why you get your stop losses in place. That's why you have all those things in place. And it's funny because we call that market manipulation when it turns and moves that quickly. But you know what? I've been helped just as much as I've been hurt by market manipulation. Because there are times I'll be in the market, short, and the market dumps down. And you know what? I was looking to get out with 1, 2, 3 pips, something like that, because that's all I thought it would be. And it moved in my direction 15, 20. I think the biggest one I've ever had was 30 pips. Doesn't happen very often. But, that's what can happen. And, at the same time, I've also had the market move against me, 15, 20, 30 pips. But because I have my stop losses in place, I'm protecting and preserving that capital. And because I'm protecting and preserving that capital, fine. Let's say I had my stop loss at 7 pips. If the market's moving that quick, I'm probably not going to get out at 7. I'm probably going to take a loss at 12 or maybe even 15, but at least I'm not taking a loss at 30. That's the important part. I'm preserving capital against some type of, disaster that was unforeseen.
Yeah. Now, let's switch gears for a moment, because we had 1 or 2 traders, I guess, discover the videos, and they see the Walmal method, and I think the simplicity of the method has them, questioning, because somebody said, well, do I just go green at the green line and red at the red line?
Yes and no. I hate answering questions like that, but yeah, that's what you do. But at the same time, you want to go and look left, because if you read the PDF that's out there, you'll see it says clearly in there, look left. So do I want to go and, let's say I want to go long. For instance, we can go look at this particular hour. We just have a new hour came up. We got a green Walmart line there, sitting at the 70 line. Now, would I have gone long there? Probably not. And the reason why not is because if you look left to the previous hour, it rejected it pretty soundly. It didn't like that there. Now, if I was to go long there, I'd probably wait for a second incursion of that line on a 5-minute chart, and I'd be looking to pull out very, very quickly. So that, you have to go and take into consideration what has the market done at that particular time. It's not going to go and tell you to do something. It's going to tell you not to do something. And that's really what it comes down to. So yes, you just simply go, you go long at a green line and you go short at a red line. It's just that simple. But we have to take into consideration all the other things. One of the things also, if you look in that PDF, is that I don't go and trade past, 11 o'clock, Eastern time. And the reason why is because the market tends to slow down. You just don't get big moves across those lines. And I've seen that, we did statistical analysis on that, and that's just what we saw. So I wouldn't trade that 12 o'clock line. Just for me, which just wouldn't be worth it. Now, does that mean I stop trading at 12 o'clock? No. I just may go and use a different method for entry, or if I do go and trade the line, what I'm going to do is I'm going to look to get in and get out very, very quickly. And I'm going to base that on what has happened during this day. Has there been problems at this line all day long, or not? If there's been problems there at that line all day long, that'd be kind of foolish to go and take that long trade there.
Yeah, because in fact it put in a 3-ball right at 70.
Exactly. And what does that tell you? That tells you that, there's more to the equation than this, but, at least 34 candles there's no high for at least 34 candles in a row. So that tells you that's pretty significant, that we're kind of in rarefied air, so to speak. So there's a good chance that it's going to turn around at that point, and it's going to be difficult. That's also why I look on the 5-minute chart, and I'd start looking, if I was really intent on going long there, I go to the 5-minute chart and I wait for a second incursion. I wouldn't even take the second cross of it on the 1-minute chart. I go to the 5-minute chart and wait for an incursion on the 5-minute chart. Meaning I want a 5-minute candle to close below, and then I take the next 5-minute candle that goes above. It just seems to keep you out of some trouble, because there's been some trouble at that line. I want some time to pass. I want to really be a situation where the market really has made a decision. It's going to go further up from here. Now, will that knock you out of some profitable trades? Absolutely. It absolutely will do that. But at the same time, I also know that from experience and just watching the market over time, that'll tend to keep you out. So right now, we're now having on the 5-minute chart a second incursion of that line. So now I would start thinking, well, maybe I can go and do it, and take that trade. And if you would have, you could have gotten, a pip or so far, pip and a half, and like I said, looking to the left, I wouldn't be looking to get more than a pip and a half, 2 pips, just because of how much trouble has been there. And it pulled back on me. And so, I would probably go and just pulled my 1 pip off the table as soon as it went and put that 2-ball up there, and it stopped. I probably would have just punched out, waited for that thing to fall below the 70 again, and maybe take the trade a second time.
Yeah. So, fellow traders, the fastest 15 minutes in trading is up. So I hope maybe when you start to think about your money management and profit, you think big picture and you don't really focus so much trade by trade and get bent out of shape. Just keep your eye on the main goal. So that's it. Just remember, when you're trading, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.